Hey, welcome back. In this video, we're going to be talking about what's a pre-approval and why do you need one. All right, let's dig right into it. So first of all, pre-approvals are so important because it really communicates to the sellers that you're capable, you're qualified, you're able to purchase their home. And so before we get looking, before we make offers, we've got to have that either that you're all cash or that you've got a pre-approval in hand, which is most people's case. So the first thing is going to be picking your lender. Now, here's what's really, really important to get this right on the front end, and that is you have to go with a lender who either you've worked with before, a family member's worked with before, or that I've recommended. Somebody needs to have a great experience with the lender, that we know that they're solid, we know that they know what they're doing, so that we're not going to get, your offer accepted 2, 3, 4 weeks down the road, and then all of a sudden everything falls apart because they missed something. So it's incredibly important. Either take one of my recommendations or go with somebody that you do know from a relative or some other past experience. Now, I will also shamelessly plug, we've got a sister company called Keller Mortgage. I don't get paid to promote them. I don't even care who you use, but I will say they're a great option. You should look at them. They have 0 lender fees. They give you a $1,000 credit if the loan's over $150,000, and they have fantastic interest rates. So you can bundle your service with them if you would like, or you can of course go with somebody that you know from before. So picking your lender is the number one thing you've got to do. That's what you've got to do first. Now, I am going to tell you to shop from a few different lenders. So if you've got 2 or 3 different recommendations, that is perfect. Point number 2 then is going to be to go ahead and apply with those lenders that you're looking at. Again, 2 or 3, you'll fill out their loan applications. You will have to submit all your documentation on the front end, which can be kind of annoying, quite honestly. You've got to go dig out those old tax records and bank statements and W-2s and fill out all the information. But it'll be very worth your while to make sure you've shopped from a few different companies. So you'll go to their website that they'll send you to, fill out that loan application, and then we can go to point number 3, which is shop and compare between the lenders. So what's gonna happen is they will get you what's called a cost worksheet, or maybe a fees worksheet they call it, that's got all the estimates of what it's gonna cost for that purchase, for everything. Realtor fees, buying, the whole process, what it'll be due at the end. And so quite honestly, if you would like help with this, it's kind of like reading Greek and French and you're trying to figure out how they go together. If you'd like to send them to me, I'd be happy to look over your cost worksheets for you. We even do that in a buyer's consult, so if you'd like to come in, we can do that in person. But what you're gonna be looking for is this, and it's very important. You wanna look at specifically the money that's going to the lenders, okay? Here's what's happening. On the back end, they're all estimating how much your title fees will be, how much your property taxes will be, how much your homeowner's insurance policy is going to be. Many things are just being estimated now, and it'll be the same end result regardless of which company you go with for your loan. It's just the lender fees that will vary from each one. So if one guy guessed, $200 for your homeowner's insurance policy and another one guessed $300, it will look like one's more expensive than the other, but it's not. So look at those lender fees. You're looking for specifically underwriting, processing, and origination. Sometimes they will throw in points to buy down your interest rate. Sometimes they'll call them administrative fees, something like that. Those are what you want to look at. So then we'll look at those 2 rates side by side and we'll see who's got the best fees of the lenders that you've selected. Then the second thing you want to check is what interest rates have they given you. That can even be a lot more important than just the fees at closing, but you want to see what interest rate are you going to be paying over the life of that loan. So again, something you need to look for is if they had stuck in there buying down the interest rate or points paid, basically, you pay some money up front in order to get a lower interest rate. So again, you might have one that's got higher fees, but one with a lower interest rate. But if you look at there, if you back off fees and if you add up that interest rate, you got to really make sure you're comparing apples to apples. So again, let me know if you need some help reading through those. I do it all the time and I still get confused at what in the world they're talking about. So that's how you can shop from one lender to the next. Now that you understand what a pre-approval is, how to pick a great lender, how to compare the terms of each of them, your next step really is going to be to schedule a buyer's consult. So I'll put my contact info in the link below and then just let me know how I can help. Of course, I've got more great videos like this coming up right now, and subscribe to my channel so you can get new content like this every single week. Thanks so much. Have a great day.